you're probably asking yourself, who is this guy? Well, for those of you who might be curious, I am the Asian Bruce Wayne. As you can see here, I am inside my Bat Cave with my nice cars in the back. And what we're going to be talking about today is the stock market, what my analysis is, and where we think we're going globally. Now, before we break down into it, go ahead and follow, like, subscribe, comment on this post if you believe I am the real Asian Bruce Wayne. And sometimes we can also be called Batman. But that'll be for a later date. So let's break into things. Let's take a look at the chart of the SPY here. Ignore all my support and resistance on a daily chart here. So right now we're on the monthly time frame, and as you can see here, we wicked kind of the previous high here. Now we still got 10 days ago, and there's still a lot more news coming out. There's still a lot more tension globally. Now, from my understanding, is that we're at a key point now where there has to be some sort of good news, and if there is no good news, this thing is going to continue down further. Now, if you're reading any type of volume, you should expect that it should reach down here. Now, why do I say that? This, back in March of 2020, Monday, right? Obviously, COVID happened. Now, you knew how big that was, right? That was 5 billion. I could possibly be wrong. However, we're not in good economic standpoint. All of the tariffs that are happening right now are affecting all global economies. So what does this mean? This means that if the tariffs aren't fixed, the entire world will be affected. Kind of like what happened back in 2020 when the pandemic occurred. Obviously, it came down a very large chunk. Everybody was losing money in their 401ks. Everybody was losing money. Everybody was getting fired from their jobs. And if you take a look at things, especially here in America, not many people can get jobs. And it's a tough job market. So I'm expecting, worst case scenario, we come down here. So I'll kind of mark that off for you guys, if I can figure out which one that is, right? So we could say all the way down here. Now a second point, maybe something a little bit more closer. Sorry, I was looking at something else here. Kind of a fair value gap here where a lot of orders that need to be filled. I think this will hit first. And if this hits and it holds support around here, I think we're good. So right now, obviously we are still trying to fight our way here. Obviously there's been a lot of orders and a lot of consolidation in this area right here. But the previous high that was here definitely holds some resistance. So if there's a recession, we should go lower. And obviously I don't think that it would hit this level here unless if it's real bad. Now, you really don't see them come down to lower highs, especially in SPY, because SPY has the top 500, Fortune 500 companies in the world, okay? But if it gets real bad, I'll just say for this example, I think worst case scenario we hit here. Now if it gets real bad, we might come down to these lows here. Now another thing that we also need to take a look at is the RRP. Now, why do we take a look at the overnight reverse purchase agreements? Well, this shows where economic money or the financial institutions come into play. Now, when markets get rough, they start putting money into here. The reason why is because their money is safe, they're able to collect interest rate. So the higher it goes, the more money they're putting into a safer asset. Now, as it comes down, money is either being put into cash or back into stocks. And as you can see here, right, there was a lot of volatility, everybody was losing money, but you can see here, we're almost to the point back in 2021 where all capital was in play. Everybody was sitting on cash, and then they were just going to load up. Okay? And as you can see here, back in March of 2020, they started putting their money in there. Now, what had happened was that over the years, back in 2020, they were either sitting on cash or putting more money into assets. Now, this past year, they started pouring that money back in after they printed all that money. Okay? When they printed all that money, they had money available for them. But here we go. Where we're at right now. Because the money is all being liquidated from the market, everybody's sitting on cash. Look at Warren Buffett. Warren Buffett is still on cash. He hasn't added any positions lately. And we're coming down to the point of where cash, everybody's sitting on it. Now, where is all this money going if all the money is leaving the markets, right? They're leaving the markets and creating a lot of fear for a lot of retail investors. So, a lot has happened in the past couple months, in the past couple weeks regarding Trump, regarding a recession, right? And usually when I see news outlets put out negative news, I think the opposite. The reason why that these news outlets are putting it is because they're owned by a lot of these companies who are saying, ooh, we're scared. No, they're not scared. They're sitting on cash so they can dump money into the market. Why would they do that? It's kind of a legitimate rug pull if you are into meme coins and stuff like that. So, obviously, they're saying the market is bad, don't buy, sell all your assets, right? That's what happened this past month, right? Everybody's scared, everybody's losing money. This shit had never happened, right? If a recession occurs, which there's a chance of it happening, I can't tell the future. But like I think this will follow through. I think through the month it's going to get worse. Because here's the thing. When something bad happens, there's obviously some effects to it. Now, when there's a problem, you don't instantly solve that issue right away. It's going to take some time. Take a look at earnings reports. They do them quarterly, right? So the past 3 months, yes, there have been tariffs. So we should expect that these new earnings reports that are coming into this next quarter are going to be poor. So I personally believe that the next 3 months here are just going to be a downtrend in the market. I don't think that we're going to be in a bull market for another 6 to 12 months, just to be realistic here. And the only way I feel, or from my understanding, for the market to go back up is if they start cutting interest rates. The reason why is because when interest rates go down, prices of assets go up. Now, from that, now you're saying, okay, if they cut home loan interest rates, where I think they're at like 6.8%, when back in 2020 they used to be 3 to almost maybe 2%. But if you bought a home in 2019 and sold your home in 2020, you would have made a ton of money, like 100 grand or even more, just depending, because everybody wanted to buy a home at a cheaper interest rate. When the interest rates are higher, you pay more over time, and especially with homes, you hold those things for 30 up years, right? Because the majority of mortgages are 30 up years. So the better you can get on a home loan, the more people are going to buy. It's all about supply and demand. So interest rates are super high. Well, they're not actually super high for home mortgages, right? Because the average on on mortgages is 6%. If you take a look at the statistic here, right? So let's just say, what is the average of mortgage mortgage interest rates? Okay, look at here, 6.83. Well, that's the average right now. What is the average mortgage interest rates um, over the last 20 years, right? So over the last 20 years, 2005 to 2025, so it was as low as 2.65 and high of 7.79%. So we can see here, rates generally started above back in the 2006%, reaching a low of 5% range. 2010, 4%. 2020, 3%. But guess what? Now we are in the 6%, 7% range. It's got to come down. But in order for things to go down, things must come up first. And I believe that interest rates will have to still be coming up. And even Jerome Powell said it. Jerome Powell said that there will not be many interest rate cuts this year. And obviously, I think this was back in August, is when he said it. And so everybody got scared. So, I don't expect interest rates to cut until later this year or even next year. So, yes, you should be scared, but then also at the same time, you could also make money. If you look at, let's just say, a daily time frame on SPY, we're pretty much at highs here. If Monday opens up and it hits this high, we could definitely see it coming down a lot more. But you can see here there's not much volume that's coming in there. A lot of resistance in this area, of course. And let's see here. A lot of resistance around here. So roughly around this area and this area. We'll just mark that out, right? Right there is a good bounce. It just really depends on Monday what happens. But I also took a look at what was happening with some statements with the World Economic Forum. Now, the World Economic Forum is supposed to release some news on the 22nd, which is Tuesday. And it's going to be, or maybe it's the UN. Let me see here. Economic news this week. Let's see here. U.S. economic calendar. Okay. I don't want to look at that, right? Monday, U.S. leading economic indicators. That's April 21st. That's a huge one. We should see an increase. Let's just be honest here. Take shorts. However, people, they'll be shorting it. The large financial institutions will be shorting this during post and pre-market. So just be careful where you're going to enter. If you're trading futures, go ahead and take your positions. Obviously, this is not financial advice, right? This is what, through my personal, my personal beliefs are. All right, Tuesday, April 22nd. Don't even know who those guys are. I probably should look them up. Wednesday, the 23rd, Chicago Fed president. This is a big one. St. Louis president. S&P Flash U.S. Services PMI. Manufacturing PMI. Okay. Then we have new home sales. I'll tell you right now, it is not looking good. Not looking good here. Initial jobless claims. Durable good orders. Okay. Existing home sales. Let's be honest here. Just regarding homes, nobody should try to buy with these high interest rates, 6.8%. It's pretty high. But you know who's buying? Investors. So if you're planning to buy a home, you make sure it's cash. Or what you could do, you could do a refi when the interest rates come down. You buy now because prices of homes are cheap, and then you refi at a later day with lower interest rates. Well, it might not be another year or two. Okay? Tuesday, April 29th. I mean, towards the end of the month, it's not going to be any good news. So, if I were you, I would just take shorts. We have so much to go through here, right? And let's just even take a look at a short position right here, right? And we just take the low. And your stop would be this high, right? That is 8%. But if you did options, that's 800%. 800% if you took shorts. Obviously, there's going to be some theta, there's going to be the Greeks, there's going to be so much volatility, but just understand, in the long run, what your analysis is, what you believe in. If you believe in what I believe in, okay, great, right? That's up to you. Whatever you think, you got to have a plan for your next steps. So let's see what else here. Oof. This one's going to be tough. Beginning of next month. It's going to get real tight in the beginning of May. Real tight. Real tight. Right? At the beginning of May, they got all this. They got the manufacturing. Well, auto sales. Employment report. Unemployment report. U.S. hourly wages. If I were you, I'd probably take your shorts based on news. Monday, April 28th. Or you could take it this week, to be honest. If you take it this week on the Monday of 21st, you make a shit ton of money. And you hold for about 2 weeks, right? I think that's 2 weeks. If you hold for 2 weeks, you'll be printing. If I'm wrong, comment back on this post and let me know. Not everybody is right and not everybody is wrong. But I think Bruce Wayne over here has a good idea of where the market is going to go. It's hard for people to get jobs. It doesn't take a snap of a finger for these manufacturing jobs to just appear. There's no good news. There's wars happening. The tariffs are tearing all these countries up. Yeah, the market went up when Trump announced that there will be no reciprocal tariffs for the next 90 days. Okay? That is 3 months. But here's the thing. They're going to be chopping up. But who knows? If China and U.S. agree on some terms, boom, reciprocal tariffs off, and he'll be wrapping up, laying down the law. But he may not. But here's the issue. Jerome Powell is not going to go cut rates. Once those rates start cutting, the market is going to pump. So it really just matters on what's going to happen with Jerome Powell. Let's see here. Jerome Powell, when does his term end? Let's see here. Let's see here. Do we believe the Federal Reserve? Okay, here we go. He was reappointed to the board and sworn in on June 16, 2014 for a term ending January 31st in 2028. Okay, so we got 3 more years with this guy. But let's see if Trump can actually fire him. Can Trump fire Powell? Let's see here. Let's see what Yahoo Finance says. Says here, President Trump is threatening to remove Federal Reserve Chair Jerome Powell. Whether such a move is legal could soon be decided by the Supreme Court. The president has asked the nation's highest court in an emergency petition to endorse his decision. Okay, let's see here. It is a direct challenge to a 9-year-old. Okay. Let's see here. This is now by his wish. Powell termination cannot come fast enough. Okay. His potential replacement. Oh, but Trump, some of Trump's economic ideas or economic aides have advised against removing Powell before his term is up in May 2026. Okay. So May 2026. So almost a year from now. He's got a year to fix things up. And if we're really taking a look at things, let's be honest here. There has to be some sort of legal action behind Jerome Powell. Jerome Powell will either step down or he'll drag this on. And I almost guarantee you that Jerome Powell is going to increase interest rates just based upon the world of where it's going. So this is just my hypothesis. Obviously, I could be wrong. And it could be scary for a lot of people. Now, obviously we have this support level here. And we have this gap up here. It touched the gap, but it filled this gap. So we no longer take a look at it once it fills the gap. Now I think we're trending lower. There's not going to be any good news happening for the next 2 weeks, maybe 3 weeks. So we could see this come down to this level, just to be honest here. And it's where I marked it out. Huge gap right there. A lot of orders that need to get filled. So, we could also take a look at VIX here. As you can see, when VIX goes up, stock market goes down. And we're on a good trend here. It's going up, it's going up. Let's see what 2020 looks like. March 2020, boom! Look at that. So much volatility. So much volatility. Okay. We can also look at QQQ. All the tech stocks. Okay. Let's see where this thing can go. Right here. There's a gap right here that needs to be filled. Not many orders. So I think that over the next month or so, we should see this come down. Now what you could also take a look at here, we'll take a look at some of these as well. I could take shorts on SoFi. Obviously there's a gap right here that needs to be filled. Gap that was filled here. I don't think it went any lower. Maybe this one. Not quite too sure. Anyways, I'm kind of getting off topic. What does it mean for Bitcoin? Let's see here. We take a look at the monthly basis. Kind of see what happened back in 2020 to 2021. Boom, large pump, comes down. I think we see one last pump here. We see one last pump, and then it'll come back down. And I think the new level will probably be roughly around here. 40,000. I could see that. Pump. 13. Let's see, what's that? 3. That's 10,000. Okay. Anyways, it needs to come back down. We got one more pump in us. One more pump. Wait, did we already do the last one? Anyways, NVIDIA. I have this marked out. Look at that. I personally believe that we will definitely be going down for the next 2 months here. So what can we say? What stocks can we say that are going to do good during this recession? We'll take a look at Costco. Costco, look, Costco's going up. All this market volatility is going up. Okay, let's look at Johnson & Johnson. Let's see here. JJ. Oh, can't do futures here. Johnson & Johnson. Look at this. They're not doing so hot, I guess. I mean, it's just going up and down. A lot of pharmaceutical companies actually go up during these troubling times. I do like this one. I like OPRX. I do like this one. Okay. Let's see here. Starbucks. It's going down. Alright. Let's get back on track. So, based upon everything that we talked about, I think that you take it with a grain of salt. My analysis could be wrong. It could be right. Should I be crossing my fingers that I'm right? Well, I'm betting on myself to go win. And I think that's what's great about trading is that no matter where the state of the economy is, you will always have an opportunity to go make money. And if you have a job, if you have, if you might get fired, whatever your situation is, there's always an opportunity for you to make money, whether it's good or bad. Yes, my analysis is going towards the downfall of the U.S. economy and all of the global economies. It's not a good outlook. People are going to be losing their jobs. People are going to be losing their homes. People are just going to be financially distressed. Yeah, that stuff happens. But it's your fault, or it's their fault, that they made the decisions that they made to not set themselves up for success. That's very key. You gotta, at a young age, you gotta understand, okay, this is where I want to be at, this is what I want to do. You can have the FU money and just be financially free if you plan accordingly to where your goals are at. But the majority of people just, play the 9 to 5. The United States was made to become you come over here for opportunity. Might as well take advantage of the opportunity while you're here. A lot of other people just don't have that kind of opportunity or have that amount of capital. So if you take anything away from this, let me know in the comments below. Let me know if you want to hear more from Bruce Wayne or Batman. Man, I need to work on my Batman voice. If you guys have any questions, I do have a Discord as well. You guys can join that Discord. I'm deciding whether or not I should be doing it as a paid Discord, just so people aren't wasting my time. Actually, you know what? I'll make it a paid Discord so that people aren't wasting my time. Because I think what I talk about is very valuable. I've made money on my positions before. I called that the stock market was going to go down at the beginning of this year. I made over a ton of money during that time period. I held my positions over long term, how do I say it, multiple days. And, I do swing trade. Swing trade, I think, is you're able to handle the volatility. If you day trade, just be careful. But I think over the long term, you could take your short positions, and then with the profit that you take from the day trading or the swing trading, you can then put into your stocks because stocks are so much cheaper. You can literally put it into Costco. You can put it into healthcare stocks. Any stock that has anything to do with necessity during a recession, like toilet paper, food, fast food restaurants, McDonald's. McDonald's is a good one that you can put your money into because everybody knows it's cheap, it's easily obtainable, and during a recession or when things are rough, people want the cheap stuff. You might as well take advantage of it. So I hope you guys learned a lot today so that you can be rich like Bruce Wayne, the Asian Bruce Wayne. We will show you how to be rich or lose all your money. I'm just kidding. I don't recommend that. But let me know what you guys think of this. I'll see you guys in the next one, maybe in my bat cave.